Welcome back. You're watching Buy Now, Sell Now. It's time to take the queries which have been pouring in, and today I promise you that things are going to go much faster because Shelan and I are in office and there won't be a lag today to deal with. We've got Kunal Bothra as well as AK Prabhakar joining us. Thank you so much, gentlemen, for taking the time, and always a pleasure speaking with you. Kunal, a lot of your viewers have missed you very, very greatly, and they're very happy that you're back. I will start with a question to you first. We've got Satya, who's asking about HCL Tech, and he's looking at possibly buying it for a period of 1 year. Is this the right time to enter based on the charts? Okay, we seem to have an issue with Kunal's feed at the moment. Mr. Prabhakar, I come to you on this one. Maybe not on the technicals, but based on the fundamentals and how you see IT space moving. Would you buy HCL Tech at this juncture for at least a year?
See, IT stock in the last 18 months, they have run up very fast. And now they have a problem. The attrition rate in most of the IT companies is somewhere around 20 to 25%. I think they will have an escalation in their employee cost. So that is where I think their margins might be impacted. So I think another 10-15% correction in HCL Tech would be an opportunity to buy, not at current level.
Let me take this one from Ravi Mohan, and he's saying that he's invested over 3 lakh rupees in IPOs of ICICI Prudential, as well as Lombard, as well as SBI Life, and he's holding on to these counters since then. So he wants to know what should he do, what is the future prospect for these names, and should he continue to hold or should he exit? What's your take on this one, Mr. Prabhakar? Should he continue to hold on to these names? All of them are in the insurance space.
Yeah, no. In life insurance, we need to understand that due to COVID in the last 2 years, the claims have been very high. That is where now ICICI, Pru Life or SBI Life, their profitability has been impacted. But when it comes to growth, they are consistently growing above 15%. So growth is not the problem, but the problem is the claims which they are getting due to COVID-related fatalities. So we need, for a long-term investor, it is not a worry. It is very good for them to accumulate when the pain is there. I think now the COVID thing is almost over with more than 75% of Indian adults being vaccinated. I don't think that will happen. So I think it is a very good buy if you are looking at life insurance for 3 to 5 years. ICICI Lombard, I think they also had few problems, but for a long-term investor, ICICI Lombard is also a good buy.
I'm assuming we don't yet have Kunal with us. I'll come back to you for this next one as well, Mr. Prabhakar. We've got a question coming in from Tina, and she's looking at stocks like Bata, like Asian Paints. Basically, she's looking for low beta counters that can give her a CAGR of about 12% or something like that, 12 to 15%. Is there, are these the right ones to consider, or would you suggest another name?
Yeah, I think, Asian Paints, anytime the stock corrects 10%, again it moves higher. And they have a market share of more than 45% in their segment, and Bata India, these are stocks, any correction is an opportunity to buy. And if you are looking at 12% CAGR return, I think these two are very good stocks. We can add few more to it, like DMart is one. There are many other stocks, which will, Havells, Pidilite, these are stocks which will give 12% CAGR return.
This one is from Renuka, and she's saying that she's holding 50 shares of Sanofi India for the last several years. She's saying that it's underperforming, so she wants to know whether she should hold or switch to any other sector. She's not exactly told us what's the buy price, but definitely she's told us that she is actually the stock is underperforming. So what should she do with Sanofi India, Mr. Prabhakar? Should she hold on to it or look at some other sectors or counters altogether?
See, these MNC Pharma, they had a growth about 3 years back, after which the growth has moderated. So I think, these are, somewhat, total pharma pack as such, there is underperformance. So I don't know how much time it will continue, but somehow, this MNC Pharma, it is now out of favor also. So if you want, you can move to FMCG stock. which is also underperforming, but I think the recovery will be faster in FMCG.
And you've already spoken about Asian Paints. We've got a question coming in from Krishnan, who points out that he's a senior citizen, but Mr. Prabhakar, stocks like HUL, stocks like HDFC, he's also mentioned Asian Paints. Would you suggest that these are good stocks for SIP mode of accumulation? And he's asking whether they've lost or run out of steam.
No, I don't think so. No, we need to understand crude prices are at elevated level, so which is having an impact on Asian Paints. Asian Paints, no, if you see the margins were impacted. No, and no, this is a temporary phenomena, but these companies will be able to pass on the cost. Even Hindustan Lever, there is an inflation pressure. So I think another 2-3 quarters, the pain period will be there for FMCG, and raw material costs have increased, so their margins will be slightly lower. But for a long-term investor, I don't think there is a problem. And somebody who is looking at like a SIP, then his averaging cost will help him. Averaging out will help him.
Okay, this one is from Rajendra Prasad, and he wants to know if it's the right time to buy Nykaa shares. He's already holding 25 shares at a price of 1742 rupees per share. He wants to know how will it look like in the longer term. What's your take, Mr. Prabhakar? Nykaa, very tricky question. What's happening with these particular counters, we all know. Do you think that it makes sense for Mr. Rajendra to go and purchase some more?
In the last 6 months, what has happened is, I will not say last 6 months, last 3-4 months, the high PE stocks have seen a major correction. And the valuation is not too attractive for us to enter now. And if Fed hikes rate, I expect some correction in Indian markets too. That will be a better time to buy. Now it is time to wait in high PE stocks. We have seen most of the stocks correcting. Let it be DMart, Nykaa, Zomato, many have corrected. So I think more pain is there. So let us wait for a right time to enter.
The other factor also is that they're facing headwinds like everybody else. Their margins have contracted to 6% in the quarter that was just reported on. Let's take the next question. Dixon Tech is the next counter that I think Shravan from Ahmedabad wants to know about. He's looking at picking up Dixon Tech as well as L&T Infrastructure. He's looking at 2 to 3 years, Mr. Prabhakar. Is that a good time frame, and are these good stocks?
See, Dixon is a good stock, but the valuation comfort is not there. So I think a reasonable correction would be a better, and it is a very low margin business. It is not a high margin business. So we need to understand that for them they need to grow at 40 to 50% CAGR. Otherwise, at current valuation, it is not sustainable. The other stock I'm not tracking, or I didn't hear it very clearly. I heard infrastructure.
L&T. Mr. Prabhakar.
No, I am not hearing you.
Talking about Larsen & Toubro, if you can hear me.
Okay, L&T.
Yes.
Yeah. No, that is a quality stock. We need to understand, India's government focus is infrastructure. So when infrastructure is a theme, L&T will perform. And we need to understand L&T is not a mid cap or small cap company which can give us, 15-20% CAGR return. If you are okay with 12% CAGR return, L&T is a very good stock to hold on.
All right, this one is coming in from Prateek, and he wants a view on Whirlpool as he is actually stuck with this particular counter. He purchased 40 shares of Whirlpool at the price of 2,200 rupees per share. He wants to know the view for the next 2 to 3 months for the shorter term, and will he get a price to exit, or should he hold as of for now? But not for 2 to 3 months, but on the longer term perspective, what do you think about Whirlpool? Mr. Prabhakar, what should Prateek do with his holding? He's saying that he's stuck with it.
So these white goods, the sales have not done very good last time, and due to RM cost increase, their profitability also got impacted. Whirlpool is a very good company, a US based company, and they have a lot of products. But somehow the rural strain and even our climatic condition has impacted sales of air condition and other white goods. So I think you need to have slightly more time. Even Johnson, Hitachi, they have not done very good. Most of the companies have failed in the last 3-4 quarters. But once they backward integrate, when they can procure equipments within India, then things will change. Their margins will improve. So you need to be slightly patient in this stock. It is not for 1-2 years. It should be 3 to 5 years.
Okay, we've got a question coming, and you know what, Kunal is joining us on the phone line because I believe his network is not cooperating with him. Kunal, I think I jinxed it, when I said welcome back and that your viewers were missing you. But we've got a question coming in from Mahesh Babu, and this is on Adani Ports. He's asking whether he can buy at the current level for a period of 6 months.
Well, yeah, Alex, sort of some sort of jinx. But for Adani Ports, I believe that it's better to wait for a breakout to happen for Adani Ports. I still believe that the stock is trading into a consolidation range for itself. I think 750 is the breakout point for Adani Ports. So if you're not in any kind of a hurry and you want the markets to start trending up, I think that's the best time to try and buy these stocks. So wait patiently for a breakout. Maybe it may take a couple of days or maybe a couple of weeks or maybe a month or so for the breakout to happen. So I would suggest to wait for 750. And once that breakout happens, then the legs open up for almost 800 to 825 for Adani Ports. So it's worth waiting for the next 25, 30 points for a breakout for Adani Ports.
Adani Group of companies. Abhishek wants to know whether he should buy Adani Power at current levels and what sort of a target should he look at. Kunal, any view on Adani Power? What levels should Abhishek look to buy?
See, in the last 2 days, Adani Power has done exceptionally well. My sense is that it's got to do with something, with the recent activity which you've seen for the entire Adani Group of stocks. But then, remember that it's best to buy these stocks when there is a phase of low volatility and low price uptrend. So let the volumes subside, let the prices come back to maybe 114, 115 kind of a range. That would be an ideal time to buy the stock, not at current levels. So I would suggest a wait. 114 approximately could be a good level where you can look to enter Adani Power.
Maybe this is a broader answer, Kunal, but what do you do when you're stuck in a stock that is constantly hitting lower circuit? How do you exit? And the stock, I think that we've got Akash who's asking, he says that he's stuck with Tata Teleservices. I think he's been trying to exit. How does he do that?
Well, I think it's very difficult to, we always advise, Alex, in so many of our earlier shows that we avoid recommending such kind of stocks which hit upper circuits on a consistent basis, because the moment these stocks, they tend to go down, the reverse phenomena happens and it becomes very, very difficult to exit these kind of names, even if you have a small, quantity of shares. So it's very difficult. The only advice which I would probably give to the viewer is, at least don't look out to average your holdings if you've bought at higher levels. So that's the first mistake which we typically tend to do, because we believe that averaging could probably lower our cost price, and one bounce can lead us to exit the stocks. So at least don't average. Let the prices stabilize. I'm not sure when the circuits will open up, but then there is no point averaging when you are seeing the stock falling such sharply like what we've seen for TTML.
Move on to this next query, and this one is from Karthi Ravanan, and he's holding Carborundum Universal 100 shares at a price of 250 rupees per share. I would request my producer to show the stock price of Carborundum right now. He wants suggestion for the 5-year time period. Is it worth holding for the next generation? What's the take, Mr. Prabhakar? Carborundum, Karthi Ravanan has purchased 100 shares at the price of 250 rupees per share. I think the stock currently is trading above 800 rupees per share. What should he do? Do you think that this is worth holding on for the next generation?
I feel so. It is a very old company. It is a Chennai-based company, and they have been very consistent in their performance. So for now 5 years, 10 years holding period, Carborundum Universal is a very good stock to hold on.
All right. Let me take this next query then. This one is coming in from Manoj Kumar. And Manoj Kumar has just written Hind Copper for 6 to 8 months. I'm yet to decipher what he means, but it could be, should he hold on to this particular counter for the next 6 to 8 months? Or even if he's looking to buy this particular counter, do you think it makes sense at this level, Kunal?
that if it's possible to tweak, the only thing which you can have to tweak would be your time frame, because I think Hindustan Copper has been an exceptional mover from the 2020 lows. Now, I remember, I think clearly the stock which was at almost 20 rupees or 21 rupees when the pandemic low had hit, and from there the stock jumped up to almost 200 rupees. But when you still look at the long-term charts for Hindustan Copper, the all-time high was, I think in 2010 or 11 was around 650 levels for Hindustan Copper. So the stock has to do a lot more in terms of price traction. We have just seen the first phase of rally for Hindustan Copper. Metal stocks, copper stocks across the as an asset class has been doing exceptionally well. I would definitely suggest to hold on to Hindustan Copper, even though the stock is choppy and volatile. Look out for corrections as good buying opportunities, but hold it for at least the next 2 to 3 years. That's when I believe that the real potential could get unleashed for many of these, metals and commodities / themes.
Right. With that, let's kickstart now our rapid fire with both of our guests. The first query that I have is from Ajay. He's saying that he has TTK Prestige, which he's purchased at 990 rupees per share. He's asking, can it slide to 660 levels? Shall he add some more, book loss or hold? What's your take on this one, Kunal?
I would suggest to exit the stock at current levels purely because there is a lot of sluggishness in terms of price trend. The stock has broken the 200 DMA as well. So exiting this would be a better approach rather than averaging.
Rahul Piplani is looking for an outlook on TCS. Would you suggest that he should buy it on the fundamentals?
TCS is a buy, yeah.
All right, this one is from Mr. K.R. Balan. He's bought a Stovecraft at the price of 908 rupees per share. He's saying it's fallen about 30% in the last 2 days. Should he switch to Access or any large caps so that he can arrest the further fall? Or should he hold for a medium to long term? What's your take on this one, Kunal? Stovecraft, does it make sense to hold on?
Well, it doesn't make sense to hold on. I would suggest to switch to large cap names. You can probably look at HDFC Bank. That's a far more stronger and stable stock from the banking pack.
I just want to point out we're having an issue with the WhatsApp number, so I'm shifting to YouTube queries. Matilda Raju is holding 70 shares of Paytm at the issue price. Mr. Prabhakar, should she hold on?
I would avoid. We don't know when they will make profit, and I don't know when the turnaround is going to happen.
Hanumanta Raya Gowda has about 200 shares of M&M Finance that he's purchased at the price of 160 rupees per share. What's the outlook on that one? What should he do, Mr. Prabhakar?
M&M Finance, they have gone through a bad period, but now I think the rural stress is still continuing. But if you are looking at 3 to 4 years, then you can buy. Otherwise, kindly avoid if it is 1 or 2 years.
Kunal, Danny is looking for a 6-month view on KEI Industries. Do you have a view on the charts?
Well, absolutely. I think it's a fabulous chart. It has done exceptionally well over a longer term time scale. And I think it's corrected also quite sharply from 1250 levels to 950, 980 where it's currently trading right now. So if you're looking to buy from a longer term perspective, this is a good starting point. Look out for more corrections. 10% correction as a good averaging opportunity.
All right, and with that, we come to the end of the rapid fire. Thank you so much, Kunal, as well as Mr. Prabhakar, for joining us on the show, giving us your take on what the viewers should do with their current holdings, as well as sharing your views with us. But on that note, we will slip into a break on this edition of Buy Now, Sell Now. But stay tuned, there's lots lined up for you on the other side of the break, including management interactions, so don't go anywhere.